So you have been hearing about Forex or trading in general, but still not to understand anything about it. You are confused. You don't know how to go or where to start from. You have absolutely no idea of what it's all about. Then stick with me on this video. I'm not going to waste your time. I'm not going to bore you with stories, but instead, I'll head straight to the point. On this video, you are going to learn what is Forex, what is currency pairs, what is actually being traded in the Forex market, a broker, and the key concepts you must know. By the end of this video, I promise you that you will be able to place your first trade, as I am going to attach a guide at the ending of this video. So without further ado, let's head straight to today's business. What is Forex? Forex simply means foreign exchange. It is the buying or selling or exchange of different currency pairs. If you have actually exchanged dollar to naira, you have probably traded Forex. So you might be wondering, where is Forex market based? Unlike the normal traditional market, whereby it's been located at a particular geographical area, Forex is actually everywhere. It is a decentralized platform, which means there is no single central exchange or governing body controlling all trades. Instead, it operates as a global network, connecting participants through electronic communication and agreement. Unlike the stock market, the Forex market runs 24 hours a day, 5 days a week. It opens 10 p.m. Sunday, West African time, and closes 11 p.m. on Friday, with a market cap of over $7 trillion being traded every day. Currency pairs is a quotation of two different currencies, with the value of the other currency being quoted against the other. The first listed currency on a currency pair is called the base, while the second listed currency is called the quote. Example, we have Euro, USD, GBP, USD, USD, JPY. Forex pairs are in 3 letters. The first 2 letters represent the country's name, while the last letter is the country's currency. Example is NGN. NG stands for Nigeria, and the N at the last stands for Naira. What is being traded in the Forex market? Basically, money, which is currencies. So here are the most traded currencies that you should get familiar with: USD, GBP, JPY, AUD, NZD, CHF, and Euro. And that leads us to Forex major pairs. Forex major pairs are those pairs that is being most actively traded every day, which you should also get familiar with. It makes it easy for you to get in and get out of the market because there is enough volatility and enough volume in the market. A broker is a financial service company that provides traders a platform for buying and selling. They are just like a middleman between you, the market, then they are in the middle. That makes it very easy and much more accessible for us, which is the retail traders, to be able to place trades easily and simultaneously in the market. We have 4 types of market hour or market session. We have London session, which opens at 8 a.m. and closes at 5 p.m. Nigerian time. We have New York session, which opens at 2 p.m. and closes 11 p.m. We have Asian session, which opens up at 12 midnight and closes around 8 in the morning. Then we have Sydney session, which opens around 10 and closes around 7 a.m. in the morning. Exchange rate changes is measured in pip. A pip is an acronym which stands for price interest point or percentage in point. For example, let's say you are to buy Euro USD at a bid price of 1.1045 and it moved from 1.1045 to 1.1040. It's actually a decrease of 5 pip, or let's say it moves from 1.1045 to 1.1055. That is an increase of 10 pips. Trading tools, as it sounds, are softwares or instruments that allows traders to place trade effectively, analyze the market, and many more. So the tools that you will need for now are MT4, MT5, and TradingView. Leverage in trading enables you to open a trade worth more than the money you deposited. Leverage ranges from 1:1 up until 1:unlimited. For example, let's say you are to buy a Tesla stock worth $1,000, but your initial deposit was $200, or you were able to buy the stock worth $1,000. That means your broker actually borrowed you $800 extra for you to be able to buy position, for you to be able to be in a position 5 times greater than your initial money you deposited or your initial outlay. So leverage ranges from 1:1 up until 1:unlimited. Like I said, example of that is, let's say you have a leverage of, your broker gives you a leverage of 1:100. That means you have 100 times buying or selling power. A spread is the difference between the bid and the ask price. It is actually the fee a broker charges you for providing transaction immediacy. And that is actually one of the ways a broker makes money, if you are wondering. Forex is actually traded in specific amounts called lots, or basically the amount of currency units you will buy or sell. A lot is a unit measuring transaction cost. We have 4 types of lots: standard lot, mini lot, micro lot, and nano lot. If you are getting value from this video, consider hitting the subscribe button, turn on post notification, and give this video a thumbs up. Comment your thoughts, ask your questions in the comment section. I will be glad to hear what you have to say. Also, don't forget to join my Telegram channel. The link is in the description. Let's continue. Bid is the price buyers are willing to pay for a currency, while ask price is the price sellers are willing to accept. Think of it like a shop where bid is the price the shop buys your product, while ask is the price the shop sells the product to you for. So the difference between the bid and the ask price is the spread, which we discussed about earlier. Equity in Forex refers to the account balance plus the unrealized profit or loss from your open position. It is the total amount of money in your account. Usually, if something costs $100, you pay $100 for it. However, in the Forex world, you don't actually have to have the whole money, the whole amount to pay for what you're buying. Sounds good, right? You only have to deposit a certain amount to cover the possible losses. That deposit is called margin. So in simple terms, a margin is a deposit required to open and to maintain an open position. Margin doesn't represent a transaction cost or a fee, but mainly a portion of your account balance set aside to maintain or to open a position. The term order simply means how you are going to enter and how you are going to exit the market. We have 2 main types of order. We have the market order and we have the pending order. Market order simply means you initiating a trade at the price your broker gave you. That is an instant execution. And also, pending order also means you specifying a price point which you want to buy at that particular price, or you want to sell at that particular price. Bulls and bears are commonly used by traders. Bull simply means that the market is going up. Bear simply means that the market is going down. Another terms that is widely used for bulls, we have bullish, we have buy, we have long. That is for bulls. Then for bears, we have short, we have bearish, or we have sell. A stop loss level is a predetermined price at which you want your broker to close your trade in order to minimize your loss. While placing stop loss for a buy position is always at the down, and while placing a stop loss for a sell position, it's always at the top. While take profit or TP is a preset price where traders take or close their profitable position.
Here will be the very quick guide that I promised that would be dropping at the ending of this video. So market is actually closed, and we will use BTC USD for this example. Let's say we are to buy BTC USD with what we have learned about market order. We are to use instant execution. So we will click on BTC USD. You can click anywhere on this BTC USD that you are seeing down here. Just click on anywhere. If you click on it, then we'll go with the first option, new order. We'll click on new order. Then we are to make use of market execution. Automatically, you will see that it will be on market execution right here. Look at this place. It's already on market execution, which is the price this broker gave me. That is, if I click on buy now, I am actually buying with the price this broker gave me. Here is also where you can set your stop loss, where you can set your TP. So you put your SL and TP price right there. Let's go ahead and click on buy. Remember, here is also our lot size. You can adjust your lot size from that place. Let's click on buy and see what happens next. So we click on buy. We are automatically filled in with the price this broker gave me. That means we used instant execution for this. So once you buy, that is now when you are going to see that your equity will start floating. We talked about equity, and also here is also the margin that we talked about, which is the amount your broker sets aside that is being used to actually manage this trade, this open position. That is the margin you can see here. Then the equity is the total amount, is the total amount, is the total account balance. If you see, the equity is actually floating, so it's based on whether you are in a profitable position or you are in a loss. It will keep on floating. So this is just showing you your total account balance. Let's say, for instance, we are to set our stop loss. We did not set our stop loss when we were entering, maybe we forgot. So on trade, we are already on this trade. So what you can do is swipe to the left. Once you swipe to the left, you click on this pencil icon. You click on this pencil icon. Once you click on the pencil icon, it will still bring you back to this place where you can put your SL and put your TP. So that is it for instant execution. So from there, you can automatically enter any buy or sell trade. Let's talk about the other ones, which is pending orders. So let's go back. Let's use the same procedure. Click on BTC USD, click on new order. Then this place that they wrote market execution, we'll click on that place. a drop down menu will show up. So we click on it. Here's the drop down menu of our buy limit, sell limit, buy stop and sell stop. So everything I do for the buy is vice versa for the sell. So let's first of all go to BTC USD chart, which is the second option here. Let's click on the chart. So it will bring us here to the chart. So if we are to put a buy limit, let's say we want, once this price reaches, let me use the arrow instead. For instance, we want to buy at this, for instance, we want to buy at this place. So what we are saying is the price is actually still up here, but what we don't want to buy this place, which is actually the price that your broker gave you. We want to buy at this place. So what we are saying is, once we put our pending order here, that means we'll get the price at this place. I'm coming. Let's say we want to put our pending order at this price at 1.117080.973. That is where we want to buy. So what we are saying is, once we put that number, so plot that number. Once we plot that number, automatically you will see something that is here, that is written by limit right here. So what you are saying is, once this price, let's say it continue going down like this, and gets to our price, gets to the place that we want to buy, taps us in like this, automatically our trade will be open automatically. It will be open automatically. So it's either it goes back to profit or it might come down. So like we said, when we are buying, our stop loss is always at the bottom. Maybe this will be your stop loss and this will be your take profit. So if it goes to your TP, good and fine. If it goes back to your stop loss, then your broker will actually close the trade for you. If it also goes to your TP, your broker will also close the trade for you, whether you are online or you are not. The broker will automatically close the trade for you. So let's say you are to place the buy limit order at, let's use a random number. Let's use 1.1171. I don't know why I keep on saying point. 117.127.070. That is a very long number. So we click on BTC, then click on new order. Then the place that is written market execution, we click on it, then we choose buy limit instead. So everything I'm doing is also vice versa for the other ones. We click on buy limit. So you see it will bring out this option for you. That says, that is written price here. So here is now where you input that price, that long number, that place that you want for your broker to fill you in, the price that you want. And here you will now put the price there. Put your stop loss, put your take profit. Then after that, you click on place. You click on place right here. Then once the price comes down there, automatically it will fill you in. So let's quickly talk about buy stop, because buy stop and buy limit is a different thing. So for buy stop, let's still go back to BTC chart. So for buy stop is actually you are buying at the top, not at the bottom, because if you are using buy limit, you want to buy at the low, but if you are using buy stop, you want to buy at the top. So let's say, for instance, you want to buy once market breaks, once the price goes above this high, you want to buy from here once it goes above this high. So what you are saying is, you want the market to go up like this. Let's say it's going up like this. Then once it breaks this high, automatically it will activate your trade. It will activate your trade automatically, and it might continue going up and hit your TP, or it might go down. Maybe your stop loss will now be down here. It might go down to hit your stop loss. We don't control the market, we just react. So that is for buy stop. So it's also vice versa for sell stop.
Thanks for tuning in. If you find value in today's video, don't forget to hit that like button. It really helps the channel to grow. Also, hit that subscribe button and turn on the bell icon so that you will not miss the next lesson on this series. And also, don't forget to join my Telegram channel. The link is in the description of this video. In that place, I will be sharing my trading ideas and tips and every single thing. Also, don't forget to connect with me on all social media platforms at emfx_trades. Catch you on the next one. And don't forget, stay liquid, stay profitable.